Hello everyone and welcome back to Option Alpha. Tonight asking the question on our video here, should you buy options or sell options? And more specifically, should you use strategies that are based on buying options or use strategies that are used in foundational selling options? And that's really the question we want to dig into tonight. So basically what we're going to do is just go over both of them. They both have their strengths and weaknesses, but I'll show you why selling options is far better for your portfolio. So let's first go over buying options and see what those have as far as pros and cons, and just making a pros and cons list. So we have option buying pros. The only two things I can really think of, and of course I'm a little biased, but the only two things I can ever think of is that option buying has limited risk and a large profit potential. Yes, it is absolutely true that you can buy an option for $5 and it may turn out to be an option that's worth $300 at the end. But those are really it. Other than that, there's really no other, pros to option buying that I know of. Now, option buying cons, and here's where it gets into the real nitty gritty here. The first is time decay. When you ever buy an option, time is working against you. You only have a certain amount of time for that stock or ETF to move past your expiration price before you make, or your strike price before you make any money. So therefore that leads us to number two. You need a big move in the market. And not only do you need a big move, but you need it in a short period of time. And that brings us right to number three. Not only do you need a big move in a short period of time, but it has to be in the right direction of your trade. If you're trading a call, you need a big move up in a short period of time, big move lower in a short period of time. And then the last overarching reason why buying options has cons is because 76.5% of traders who buy options will lose money at expiration. And that's according to the study that the Chicago Mercantile Exchange did. Now let's move on to option selling and take a look at some of the option selling cons before we actually take a look at some of the option selling pros. The first is that your income is capped. It's absolutely true. When you buy options, you have unlimited income because stocks can go through the roof or all the way down. When you sell options, your income is capped to whatever the premium is that you received. The second thing is that it's a fairly boring strategy. I'm not going to lie to you guys. It's not a wild gung-ho day trading or penny stock system, but it is very, very profitable. It's very consistent, and it's a consistent stream of income for your portfolio. Number three, the most important one is that option selling has the stigma of unlimited risk, but I added this one line here, and that's if you're stupid, you can lose a lot of money. And the only reason I say that is because option selling does technically have the stigma of unlimited risk. If you sell a put option and the stock goes all the way to zero, well then technically you lose almost all of that money. If you sell a call option, a stock can technically go to an infinite price level. Of course, that never always happens. So I've never seen a stock go from $20 to $2,000 in a single month. That's almost never been happening. And the other thing is that here at Option Alpha, we only trade index options and options that are related to the major indexes. I've never seen the Dow or the S&P or the NASDAQ trade to zero. And I've never seen the Dow or the NASDAQ or the S&P get bought out at a higher price. It just doesn't happen. They don't have as many gaps, and that's how we eliminate the unlimited risk feature of option selling. Now finally, let's move into the option selling pros. And this is a long list here, and that's because option selling is by far the most profitable options trading system out there. And strategies based on option selling are by far more profitable than option buying. The first is you have positive time decay. Time is working in your favor. When you sell an option, you get the premium up front, and every day that the option or the stock doesn't move to that exercise or strike price, then you get to keep more and more of your money. Number two is that it's non-directional trading. You can sell an option and still be wrong on where the market's going. You can sell options higher, you can sell them at calls, You can sell options that are lower than the market price, selling puts, and no matter where the market trades, you still can make money. Number 3 is, like we said before, they're income oriented. You're not going to get huge chunks of cash, but it is going to be a steady stream of income for your portfolio. Number 4, you can still be wrong and make money. This is a really, really great feature about option selling. Say that we are selling a put option below the market. Now, even if the market goes lower, we can still make money. Of course, if it stays flat or if it goes higher, we make money, but tell me what other strategy you can have out there that's not based on option selling where you can make money even when you're wrong. And the last thing, of course, is that you're trading with the odds in your favor. Again, 76.5% of all options will expire worthless. It is a fact. And so if you just sell options right off the bat without even knowing anything else, you're already 76.5% more likely to make money than an option buyer.